So, welcome back. I'm Ted Thomas. In this episode, I'm going to answer the question, how do lease options work with tax defaulted auctions? You're going to love this session. I'm going to show you how to make big money with small money. So, I'm Ted Thomas. I've been doing this since 1970. By that, I mean buying real estate and reselling it. And I've been teaching tax liens and deeds for the last 25 years. So, I'm going to give you a lot of insider secrets that most people don't know about. But this is a way to make yourself a lot of money and start out small and end up doing a deal once and collecting checks every month for 10 years. So let me say that again. We're going to learn how to do the deal once and collect checks for 10 solid years. I'm going to show you what's called lease options in real estate. Now, this is big money if you learn how to do it. It's not a complicated business. Everybody makes it complicated. In the next few minutes, it's going to become very, very easy for each of all of you. All right, now, before I finish, I'm going to tell you about two mistakes that real estate investors make, and I want to make sure that you avoid those. So hang in with me so you can get to the end of it and see what those two mistakes are. So buying real estate for pennies on the dollar is the name of the game with tax defaulted property and tax liens. I'm going to talk about tax defaulted property, which you might call tax deeds. Now, people make a lot of big deals out of this. I'm going to simplify it. All right, so what's this episode about? It's how to do lease options with tax defaulted property. So the first thing we want to do is we want to get some bargains. Now, where are you going to get those? You're going to get those at tax defaulted auctions. And what we're going to be able to do is we're going to be able to sell them quickly. We're going to be able to use installment sales, and you're going to get paid every month. If you want to do it for 5 years or 10 years or whatever, you're going to be able to make money every single month and not have to do any work. So let's start out and learn a few of the rules. The process is relatively easy. It's simple, it's easy, and it's sure big time profitable, okay? Now, if you're going to be in real estate, everything that you do in real estate, it has to be done in writing. So it must be written down. So if you expect to make money in real estate and you want it to pass all the legal terms, you need to have it written down. But I'm going to start you out where we want to buy at auctions where we can get the properties for 10, 20, and 30 cents so that we have margin between our buying price and the selling price, or in this case, the price we're going to do a lease option. Now, tax defaulted auctions take place in the United States where properties are sold for 60, 70, 80% discounts, and you do business directly with the county. And when you buy these properties, they have no mortgage. So let me repeat that. Tax defaulted properties are sold with 60, 70, and 80% discounts, and they have no mortgage. Now, you notice I took my time going through that. You've got to get that in your brain. This is the way you get property and you make money. You make your money in real estate when you buy, especially if you think about what I said. 60, 70, 80% discounts and no mortgage. That's the place you want to be. Now, there's two business models that I followed that are really easy for you to understand because you can walk out your front door, get in your car, and you can see it actually happening. All right, so there's three companies that know how to do this business. Same business I'm doing and you're going to do. And one of them is Costco, the other one's Walmart, and the other one is Target. What do? Simple business. They try to buy as low as they can, and they try to add on, and they try to sell it as low as they can. They all buy low and sell low. That's a business strategy. What have they done with that business? They wiped out Sears. They wiped out Kmart. What's happening to JCPenney's? They're almost upside down, ready to go bankrupt. They don't understand the model. The model changed. People want value. They buy it low, they add on to it, and they sell it low. That's a strategy. Here's another strategy that you could follow. Chase Bank, Bank of America, all the big banks are doing what? Same thing. Wells Fargo Bank, they're issuing credit cards. They've learned about installment sales. If you can learn those two things and add it to your real estate expertise, you're going to be able to make a lot of money. If you don't believe it, go look at the financial statements for all of those people that I just mentioned. All right, so lease option strategy sounds complicated, but if I said rent to own, you wouldn't be surprised. If I said sell it and carry the mortgage, you wouldn't be surprised. All right, now, mortgages in the United States are all across the east side of the United States. All those banks are collecting money on mortgages. You buy a house, you're going to pay 3 times what you paid if you have a mortgage. Now, in the West, they're going to use a deed of trust, a trust deed. Okay? In the South, they'll use a deed of trust. In Georgia, they'll use a security deed. In all cases, they're willing to accept payments. Think about what I'm talking about. These are two great strategies, okay? Now, if you want to call it rent to own, you could do that. If you wanted to call it just accept payments, you could do that. But basically what you could do is you could sell them a lease with an option to buy it. So the lease would be the payments. The option would be so they could buy it in a certain period of time. So both of those are saleable. All right, now how does all this work? Well, the foundation of the whole business is being able to buy low. All right, that's what you're going to do at tax auctions. So there's 3,000 counties in the United States. There's 5,000 auctions. There's where you're going to get your inventory. And there's a never-ending inventory. To my knowledge, it's never going away. For the 25 years I've been doing it, it's been a level market. There's always plenty for everybody. So what's really happening at a tax defaulted auction? Simple process. People didn't pay the tax. Doesn't matter whether it's a big building downtown or whether it's a home or whatever it is, they didn't pay the tax. When they didn't pay tax, that sets off an alarm flag. So the local legislature, the state legislature, tells the county treasurer, look, those people aren't paying taxes, levy a tax, collect the tax, and if you can't collect it, confiscate the property. Well, they can either confiscate it or they can do tax liens. We're not talking about tax liens today, we're talking about defaulted property, tax defaulted property. So now the property's defaulted, the county confiscates the property. What are they going to do with it? They don't want the property. They do not want the property. All they want is the revenue from that property. So what they'll do is they'll put the property back into the marketplace at very close to the back taxes. Once it's sold, they've got the revenue to pay the county's bills. All right, I'm not going to go into that right now, but the point is the county just wants to get rid of the properties. Now, are these auctions big or small? If you live in a populated county, a Los Angeles or Miami or a Dallas or Houston or Kansas City or whatever, there's going to be hundreds of these properties at the auctions every year. Now, they're all being sold so that they can collect the taxes so the county can keep running. All right, your chance to buy at bargain prices with 60, 70, 80% discount is at these particular auctions. Now, I want to pause for a second and say if you've got comments you want to make or you have questions, just go below me and go ahead and ask your questions. We'll get them all answered and back to you. When you do that, I'll also give you a gift, which I'll tell you about in just a few minutes. All right, so how do these lease options work with tax defaulted property? Well, first of all, we want to get a property that's 60 to 70%, 80% under the market. Then what we want to do is we want to sell it for as high a price as we can. Now, how are you going to get a high price? Because some of these are used and abused. Well, we're not going to try to sell these properties to the people in the country club. You see, we're not going to get country club properties. Country clubs is A properties and B properties. Now, there's people who go to the auction and they pay 110% of value for those properties. You're going to buy at the auction with a 60, 70, 80% discount. When you do that, you get a property without a mortgage, and now you've got some room to bargain and resell the property. So once you purchase that property, you can do anything you want. You can move into it, you can sell it at retail, you can do anything you want. Well, why did you sell it with installment payments? So now the person's going to lease it from you, they're going to rent it from you, and you're going to give them an option to buy it, and they're going to pay you installment sale. What's wrong with that? Now, we call that, rather than lease option, we just say, we'll give you a contract for sale. So a minute ago, I said, on the East Coast, everybody uses a mortgage. On the West Coast, they use a deed of trust. But all through the middle of the country, when people want to sell ranches and farms, they sell them with a contract for deed, which just simply means that I'm going to give a contract to you. You're going to make monthly payments. When you finish making all the payments in 10 years, I'll give you the deed. Meanwhile, you have ownership. You can do whatever you want with the property. You have to pay the tax. All right, so that's all that this is. A lease with an option to buy. A lease with an option to buy. Now, the people that are buying, they're people that need help. What kind of help do they need? They don't have big down payments. They can't go to the bank. Their credit is probably terrible. But what they want is they just want to move in this afternoon if they can, because they need a place to stay. So you're still going to have to check them out. However, if you could sell it to them once and they paid you for 10 years, how would that work out for you? Well, I'm going to tell you that works out pretty darn good. But who are you going to be working with? You're going to be working with some credit challenged clients, because at the auctions, we're buying C's and D's. C's and D's are what we buy. Are we trying to get country club? Well, if you could, go ahead and get it, but you're probably not going to be able to do it. So the first thing you want to do when you get the property is you want to sell it. How do you sell it? How's Craigslist? That sound good? Doesn't cost anything. How's eBay? How about some big ugly signs? How about putting on your sign, contract for deed, seller financing? All right, now I already said There's 3,000 counties. There's going to be thousands of properties that aren't in the country club that are going to come up for sale. Someone wants to buy those properties. Someone wants to buy it from you. So here's an example with one of my clients. The property's been abandoned. It wasn't used in abuse. It had been abandoned. The people just disappeared. Nobody knows what happened to them. He purchased the property at auction for just $3,000. Nobody else bid on it. He paid the county. He waited the time to get his deed. He got the deed, did a little bit of fix-up, spent $7,000 fixing it up. He cleaned up the landscaping, cleaned up the inside. When he went and turned the key in the door to open it up, it was fully furnished. There was a car and a boat in the garage. So these things happen. So now he's got a house, and he bought it for $3,000, $7,000. He's in at $10,000. Put a sign outside, installment sale accepted. Someone came in and said, I can afford $1,000 a month for this house. He said, okay, we're going to make you a deal. You pay me $1,000 a month. You have to pay me for 7 years. 7 times 12, that's 84 months at $1,000. You figured it out already. $84,000 and he invested 10. Folks, this is one of the ways that people get rich and richer. For the next 10 years, he gets $1,000 a month. You can do the same thing. We can show you how. I'm all finished for today. The question is, can you get a real estate to help you do that? Well, yeah, you could probably get a real estate. I don't know if they want to help you. They're not making very much commission on that, but we'll sure help you. My website even has contracts on it. You can take and download the contract and look at it. Now, don't use the one that was on my website because it might not be for your state, but then you'd know what to get from an attorney who'll help you out in a few minutes. Okay, so the question comes up, and that's a good question because people say, if I'm going to buy online, how am I going to look at the property? We have so many ways to look at property that we actually have a class every Friday for 30 minutes with a specialist to teach you how to do that. But a couple of easy ways to do it is, you already know about Google, so you look at it on Google, but there's much more sophisticated ways. But you would definitely, if you're going to buy a property, you want to hire someone. You might want to get an Uber driver out there to take pictures. You might want to hire an attorney or a home inspector, paralegal attorney's office, I should say. But there's satellite systems that you can use today that are absolutely magnificent, that the earth, of course, going around, but they're able to come down right down to the 500-foot level, and you can tell whether there's a geranium on the front porch, and we can teach you how to do all that in training. Now, I'm finishing up right now, but below me, you're going to get a free gift, and that'll give you even more information. So let me tell you about those 2 mistakes that I'm concerned, and I want to teach you to avoid these mistakes. Number 1 mistake is this. People go to the auction, they get to the auction, and they start bidding, and they've never seen the property. Now, folks, you would not marry the woman if you hadn't seen her. Now, ladies, it works the same way. You're not going to marry the guy unless you'd seen him, right? All right, so let's look at these properties. You need to have boots on the ground and eyes on the property. Why? What if it had burned down? What if there was a hurricane? What if it was next to a big, long chicken barn? You wouldn't want to own a property next to a chicken barn. You wouldn't want to do that. So you have to look at the property. That's mistake 1. Now, mistake 2 is similar. People get to the auction, and I know you're fired up. You're really going to make some big money, and you're determined you're going to win. And so what do? You start bidding, and you keep bidding. Now, you don't bid unless you have an exit strategy. Let me say that again. If you don't have an exit strategy, forget about bidding. Just forget it. Why? Because you could easily bid too high and go right by your exit strategy. So you need to know what you're going to sell this property for before you ever invest. All right, so thanks for watching today. I have a gift for you guys, and you're really going to like this gift, okay? Now, it's called the Safe Haven, and it's going to talk about 2 things that are important to you. It's going to talk about tax lien certificates, show you how to make money there, give you a lot of inside secrets, and also it's going to talk about tax defaulted property. You call those tax deeds. Now, those tax deeds are issued by the states when they sell the property, sometimes 20 cents, 30 cents on the dollar. So both of those are included in the Safe Haven. You want to take advantage of that. All you have to do is go below me and register. And if you have questions, put them in there too. I'll look forward to talking with you.